Hi my dear CA intermediate students, welcome to the MCQ session. So these MCQs which I am going to discuss are from ICI resources. So ICI has created a MCQ portal in the Board of Studies app, and from that chapter wise I have taken the MCQs and that I am going to discuss with you with the justification answers. And apart from this, we have also got some case study type MCQs, that is the case scenario type MCQs, which are also given by ICI. So that also we are going to discuss in this particular video. So let's start with the first chapter. So chapter 1, GST in India, an introduction. In that, question number 1, dash provides that no tax shall be levied or collected except by authority of law. Actually, the answer for this is Article 265 of the Constitution, which says that the power to levy tax is derived under Article 265 of the Constitution to the government. Okay, so therefore arbitrary collection of tax should not be there. Except by authority of law, the tax cannot be collected. So that's what Article 265 says. Then dash of the total number of members of the GST Council shall constitute the quorum at its meeting. So in case of GST Council, total there will be 33 members, and in the 33 members, so 50% constitutes quorum. Okay, so therefore 50% means what? One half is the answer. Okay, and GST Council related provisions are contained in Article 279A of the Constitution. Okay, so the GST Council Article 279A of the Constitution deals with the provisions related to GST Council, where they are telling the quorum is 50%. Then the third question, CGST and UTGST is leviable in case of supply of goods takes place within a union territory. Okay, if it is an intrastate, okay, if it is an intrastate supply and that intrastate supply is within the state, within a state, so then what is the type of GST that will be applicable? CGST plus SGST. Suppose if this intrastate supply is within a union territory, then what is the type of GST that will be applicable? So CGST plus UTGST. Okay, and what are the union territories without state legislature? So we have 5. So that is Ladakh, then Chandigarh, Lakshadweep, Andaman and Nicobar, Daman, Diu, Dadra, Nagar Haveli. So in this case, Delhi is a union territory with state legislature. So the applicable GST will be CGST and SGST. Even Puducherry, even Jammu and Kashmir. In all these cases, this is union territory with state legislature. So union territory with state legislature, what will be the applicable GST? CGST plus SGST will be the applicable GST. Whereas Lakshadweep is union territory without state legislature. So the type of GST will be, CGST plus UTGST. That's the answer for third question. Then question number 4. Alcoholic liquor for human consumption is subject to. Alcoholic liquor for human consumption is outside the ambit of GST, and at present we have state excise duty. Yes, we have state excise duty. Even on sale, we have central sales tax and value added tax. So option C is the answer, both A and B. Then next one, question number 5. Presently dash is leviable on dash of natural gas. Natural gas is what? Petroleum product. Natural gas is petroleum products. So on petroleum products, right now there is no GST, but on manufacture we need to pay central excise duty. On manufacture we need to pay central excise duty. Then on sale we need to pay CST on interstate sale, and on intrastate sale we will pay value added tax. But state excise duty is not applicable. Even GST is also not applicable. So 2, 3 and 4 is the correct answer. So option 1, 2, 3 and 4 will be taken as the correct answer for all petroleum products. Until the time GST Council is deciding, there is no GST. but the old indirect taxes, central excise duty, sales tax and VAT will be applicable. Whereas in case of alcoholic liquor for human consumption, we have state excise duty on manufacture, CST and VAT on interstate and intrastate sale. Then question number 6, various taxes have been subsumed into GST to make one nation, one tax, one market for consumers. Out of the following, determine which taxes have been subsumed into GST. Basic customs duty, no, not got subsumed into GST. It is outside the ambit of GST. And taxes on lotteries, yes. Environment tax also not got subsumed into GST. What are the indirect taxes levied by state government that got subsumed into GST? Purchase tax, also known as octroi, value added tax, and then entertainment tax, then betting and gambling tax, and luxury tax. And so then we have this tax on lottery, betting and gambling. So only 6 indirect taxes levied by state government. 6 state government levies are subsumed into GST. What are those 6 state government levies? So we have advertisement tax. Advertisement tax got subsumed into GST. And then entertainment tax. And then we have purchase tax. So this purchase tax only called as octroi. And then value added tax, and then betting or lottery tax, and then we have luxury tax. So these are the 6 indirect taxes levied by state government that got subsumed into GST. So only tax on lotteries, but environment tax we don't have. So answer is option A, that is second case only. So now we are moving on to the next chapter, supply under GST. In that, question number 1, which of the following activities is a supply of service? Transfer of right in goods without transfer of title in goods. Yes, it is treated as supply of service. Transfer of title in goods is treated as supply of goods. Transfer of title in goods and an agreement which stipulate that property shall pass at a future date. So transfer of title at a future date, hire purchase will also be treated as supply of goods. So only first activity will be treated as supply of service. Which of the following statement is true under GST law? Grandparents are never considered as related persons to their grandson or granddaughter. So grandparents will be treated as related if they are wholly and mainly dependent, so on that person, but never considered is not the correct statement. Grandparents are always considered is also not the correct statement. Grandparents are treated as related if they are wholly and mainly dependent on their grandson or granddaughter. So this is the correct answer. Then why option D is also wrong answer? Grandparents are considered as related to their grandson or granddaughter only if they are not dependent. No, only they are wholly and mainly dependent on their grandson or granddaughter. So therefore option C is the answer. Then which of the following activities are not treated as supply even if made without consideration? So 7(1)(c) they are asking. So D, R, I, P, we need to check this. Permanent transfer or disposal of assets where ITC has been availed on such assets. Yes. So they are asking which is not treated as supply. This is supply under 7(1)(c). Then supply of goods by principal to his agent, where the agent undertakes supply such goods on behalf of principal. That is also 7(1)(c). Import of service by a person from a related person outside India for his personal use. No, it should be in the course or furtherance of business. As it is imported for personal use, it is not a supply. It is not a supply, not in the course or furtherance of business. Supply of goods between related person made in the course or furtherance of business, 7(1)(c). So the correct answer is option C, that is answer 3. Then next one, question number 4. Which of the following activities shall be treated neither as supply of goods nor as supply of services? Means they are asking which of these activities are not a supply. Permanent transfer of business asset where ITC has been availed on such asset is supply under 7(1)(c). Temporary transfer of intellectual property right. So temporary transfer of intellectual property right will also come under supply 7(1)(a). But transportation of deceased, that is death related, funeral, burial, crematorium, so mortuary, including transportation of the deceased, is not a supply. It is excluded from supply. Neither supply of goods nor supply of services means section 7 subsection 2 read with schedule 3. So we have the list of activities which are excluded from supply. So what is that? Spelled slow. So these activities only called as neither supply of goods nor supply of services. Then next, service provided by employee to employer in the course of employment. Even this activity is not a supply. So therefore 3 and 4 is the correct answer. Then next one. Number 5. Which of the following is not considered as goods under CGST Act? 10 paise coin having a sale value of 100. So it is goods. Why it is goods? Old coins or old currency not treated as goods are treated as goods. Treated as goods. It is not treated as money. As it is excluded from the meaning of money, it will become goods. Sale of shares of unlisted company, listed or unlisted company, securities. So neither goods nor services. So it is not treated as goods. Lottery tickets will come under actionable claims. Actionable claims are treated as goods. So option 2 is the correct answer. Then next one, question number 6. Which of the following amounts to supply under GST law? Services by an employee to employer in the course of employment is not a supply. Services by court or tribunal established under any law for the time being in force, that is also not a supply. Then lottery, betting and gambling. Not only lottery, betting and gambling, specified actionable claims. Okay, so what are the specified actionable claims? Specified actionable claims are HC block. What is that HC block? H for housekeeping, H for horse racing, C for casino, P for betting, L for lottery, O for online gaming, and G for gambling. So these are all treated as supply. Sale of land is not a supply. It is specifically excluded. Sale of land including sale of building. So option C is the correct answer. Then question number 7. Determine which of the following independent transactions, even if made without consideration in terms of schedule 1, will be deemed as supply. So we need to refer DRIP. Okay, so DRIP. So first one, AB Associates transfer stock of goods from its Mumbai branch to Kolkata depot. So Mumbai branch to Kolkata depot means it will come under transaction, related party transaction, including transaction between distinct persons. So it will be supply. Then Mr. Raghuveer, a dealer of air conditioner, permanently transfers a motor vehicle free of cost. ITC was blocked. So ITC not availed. So it will not be a supply. Mrs. Riddhi. So it will not come under others also. Disposal of business asset on which ITC is not available. ITC is available will not come. A related party transaction will not come. Import of service from a related person, no. Principal agent transaction also, no. So that's why it is not a supply and it is without consideration. Mrs. Riddhi, an employee of Sun Limited, received gift from an employer on the occasion of Diwali worth 21,000, which does not exceed 50,000. So therefore it is not a supply. Only the first activity will become supply under 71C read with schedule 1. So whenever we are referring to section 71C, we need to refer to read with schedule 1 of CGST Act. Then question number 8. Which of the following services received in the course or furtherance of business without consideration amount to supply? Again, without consideration means we need to refer to DRIP. Import of service by a person from his son. So son is always related, well settled in USA. So that will be treated as import of services. So from a related person in the course or furtherance of business. All these activities are in the course or furtherance of business. So 71C. Import of service by a person in India from his brother well settled in India, not a supply. Why? Brother well settled in Germany is not treated as related because family definition, son and daughter, whether or not dependent, where there is spouse, son and daughter, whereas brothers, sisters, parents, grandparents, if they are wholly and mainly dependent on that person. Import of services by a person in India from his brother, wholly dependent on such person in India, in France. So from his brother, wholly dependent on such person in India. From where? So from France. So that will become supply under 71C because dependent brother. Whereas daughter daughter don't see anything, whether or not dependent will be treated as related family definition, which will come. So therefore 1, 3 and 4 is the correct answer for this. Then question number 9, when a consumer buys a television set and he also gets mandatory warranty and a maintenance contract with the TV. So what is it? So television set and mandatory warranty and a maintenance contract. So this will be naturally bundled in the ordinary course of business because it is mandatory. So television set and warranty and maintenance is naturally bundled in the ordinary course of business. All are taxable. All are taxable and naturally bundled. What is the principal supply? So principal supply is television. So why television? Without television there won't be any warranty and maintenance contract na. So principal supply is identifiable. So therefore it will be coming under composite supply, and we need to take the rate of principal supply on the entire transaction, and the concept of composite supply and mixed supply is given in section 8. Then question number 10, determine which of the following independent transaction, even if made without consideration, will be deemed as supply. Again 7.1c, so we need to refer to DRIP. AB Associates transfer stock of goods from its Mumbai branch to Kolkata depot for sale of such goods at the depot. So transaction between related parties including distinct persons will come under distinct persons. So then this is actually repeated question. Mr. Raghuveer of dealer air conditioner, already we have seen it is not a supply, and this is also not a supply, so only one is the answer. Then next one, question number 11, which of the following activities or transactions are considered as supply of goods? So lease, tenancy, easement, license to occupy land is transfer of right to use land, it will be supply of services. Renting of immobile property, again transfer of right to use immobile property, treated as supply of service. Goods forming part of the assets of any business, so shall be deemed to be supplied by him in the course or furtherance of business. Yes, so that is at the time of cancellation of registration, whatever is the leftover closing stock, that closing stock is deemed to be supplied and it is treated as sale of goods. And temporary transfer or permitting user enjoyment of any intellectual property. Temporary transfer of IPR will be treated as supply of service, but permanent transfer of IPR is treated as supply of goods. So only on answer 3 is the, like option C is the answer. Then which of the following activities or transactions are considered as supply of services? It's again a repeated question. Transfer of title in goods is goods. Transfer of title, so where the title shall pass at a future date, goods. Goods forming part of business asset. So this is also disposal of business asset to also supply of goods. Renting of immobile property, supply of services, that is transfer of right to use immobile property. So then we have charge of GST. So in this charge of GST, question number 1, GST is not payable by recipient of services in the following cases. So when RCM is not applicable. Services, what are the list of activities which are covered under 9 subsection 3? So sir, CG, got, salads. Okay, this is the list of activities. In that, services provided by way of sponsorship to ABC Limited. So yes, it is covered under RCM. Services supplied, because recipient is body, sponsorship service where the recipient is body, corporate or firm, will come under RCM. Services supplied by a director registered under GST of Galaxy Limited to Mr. Krishna. So director providing services to Mr. Krishna, that is not RCM. Director providing services to a company in the capacity of a director is only covered under RCM, therefore it is FCM. Services by Department of Post by way of Speed Post to MNO Limited located in India. So Department of Post will be coming under FCM only, RCM will not be applicable. Service supplied by recovery agent to SNSP Bank. Recovery agent service is covered under RCM. They are asking GST is not payable by the recipient. So 2 and 3. So GST not payable by recipient, it is payable by the supplier. Then question number 2. X and Co, a supplier registered under GST in Meghalaya, wants to opt for composition scheme. So Meghalaya. So what is the applicable threshold limit for Meghalaya? What are the 8 states for which the applicable threshold limit will be 75 lakhs. So M, T, N, U, SAM. So Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya. So Meghalaya is a state where in these cases 75 lakhs is the applicable threshold limit. So option B. Then which of the following services does not fall under reverse charge provisions? Does not fall under reverse charge provisions as contained in section 9.3. Services provided by arbitral tribunal to business entity, so is RCM. Service provided by advocate or arbitrator is RCM. Sponsorship service provided to a partnership firm, again RCM. Services sponsorship service provided to body corporate or firm is covered under RCM. Sponsorship services provided to a body corporate, so that is also RCM. Service of renting of motor vehicles provided to a recipient other than body corporate. So in order to bring renting of motor vehicle under RCM, what are the three conditions? Supplier should be other than body corporate and recipient should be body corporate. As the recipient is other than body corporate, it will not come under RCM, it will be FCM. All the three conditions should be satisfied for RCM. Supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. So but here it will be not coming under RCM, so FCM. So they're asking which of the following service does not fall. So option D is the answer. Then next one, which of the following is not eligible for opting composition scheme? Not eligible. ABC, a firm selling garments sold in Ahmedabad, having an aggregate turnover of 78 lakhs in the preceding financial year. Yes, they can go for composition scheme. So they can go for composition scheme because Ahmedabad means Gujarat. So and they are a trader. So aggregate turnover during the previous year limit is 1.5 crores. Here it is only 78 lakhs. Yes, they can go for composition scheme. A startup company exclusively operating a restaurant in Delhi. Yes, restaurant 1.5 crores, Delhi. So is the limit. So yes, composition scheme they can opt. A courier service company. So courier service company operating solely in Mumbai having an aggregate turnover of 90 lakhs in the preceding financial year. No, they cannot go for composition scheme. 10.1 is not possible for a service provider other than supply of food, and 10.2a is also not possible because their turnover during the previous year is 90 lakhs, and for 10.2a service provider the applicable limit should be 50 lakhs, but here it is more than 50 lakhs, so composition scheme not possible. A trader selling grocery items solely in Orissa having an aggregate turnover of 95 lakhs in the preceding financial year, trader Orissa, so applicable limit is 1.5 crores, so definitely they can go. So option C is the answer. Then Rama Limited has provided following information for the month of September. So intrastate taxable outward supply. So what is the question? Calculate the aggregate turnover of Rama Limited. So all outward supplies, taxable outward supplies will come, exempted outward supply will come, turnover of exported goods, even zero rated also will come, payment made for availing legal services, inward supply under RCM will not come. So 8 lakhs plus 5 lakhs, so that will be 13 lakhs plus 10 lakhs, that is 23 lakhs will be taken as the aggregate turnover. Inward supplies under RCM and taxes, GST group, CGST, SGST, UTGST, IGST and cess will not be coming in aggregate turnover. Then next, but aggregate turnover for threshold limit purpose, one more extra point, like for a composition scheme, one more extra point is that interest on loans advances will not be coming. So but here they did not ask that. Then question number 6, C&Co, a registered supplier in Delhi, opted for composition scheme under 10.1. It sold goods in the fourth quarter of the financial year for 15 lakhs exclusive of GST. The applicable rate on these goods is 12%. C&Co purchased goods from Ramesh and Co registered in Delhi for 9 lakh 55, on which Ramesh and Co has charged CGST of 57,300, SGST 57,300. CG & Co has also purchased goods from E & Co registered in Haryana 2 lakh 46, on which E & Co has charged IGST of 29,520. First of all, composition scheme. We don't have to bother about the inward supplies because they cannot take ITC on their inward supplies. So we need to see only the outward supplies. What is the outward supplies? 15 lakhs. And what is the rate of GST? They are a trader. So it sold the goods. So it sold the goods means they are a trader. So 15 lakhs CGST will be 15 lakhs into 1%. So 15 lakhs into 0.5%, that is 7,500. Again, is GST is also the same. 15 lakhs into 0.5%, that will be 7,500. So CGST 7,500 and SGST 7,500. That will be taken as the answer. Option A is the answer. Then question number 7. Which of the following persons engaged in making intrastate supplies from Uttar Pradesh? So they are making intrastate supplies from Uttar Pradesh as prescribed below is not eligible for composition levy. So they are making intrastate supplies from Uttar Pradesh but not eligible even though their aggregate turnover does not exceed 1.5 crores. Restaurant, yes, they can go for composition. Restaurant and earning bank interest, yes, they can go. Trading in ice cream, yes. Restaurant, trader, yes. Repair services, 10.1 not possible. Only 10 to A. Only section 10 to A. So 10.1 is not possible. So option D is the answer. Can a registered person under composition scheme collect GST on his outward supply from the recipient? No. There are two disadvantages for a person opting for composition scheme. They cannot collect GST from their outward supplies from their customers, and they cannot take ITC on their inward supplies. So they need to pay GST out of their pocket. No, they cannot recover GST from their recipients. The next chapter that we are going to discuss is place of supply. In this first question, Mr. Hira, a registered person in Gurugram, avails architect services of Sweet Homes Private Limited, registered in Mumbai, for a property situated in London. What will be the place of supply for Sweet Homes Private Limited? So in case of service in relation to immobile property, first you need to know what is the nature of services. Is architect services, means service in relation to immobile property. We need to check the place of supply. So for that, if the location of immobile property will be taken, but if the property is outside India, then location of recipient will be taken. Okay, so therefore we need to see what is the location of the property. The property is situated in London. As a property is situated in London, the place of supply will be location of recipient. What is the location of recipient? Here the location of supplier. So Mr. Hira, registered person in Gurugram, avails the architect service from Sweet Homes Private Limited, registered in Mumbai. So location of supplier is Mumbai and location of recipient Mr. Hira is in Gurugram, and location of property. So what is the location of property? London. As location of property is outside India, so what will be taken as the place of supply? Place of supply will be location of recipient. So that will be Gurugram will be taken as the place of supply. So option A is the answer. What if the property is in India? If the property is in India, the location of property will be taken as the place of supply. That is, suppose wherever the property is in. Then next one, second question. Mr. Ankit, a permanent resident of Gurgaon travels by Indigo flight from Delhi to Mumbai. During 3 hours halt at Mumbai, he buys travel insurance at Mumbai airport and takes his onward journey flight from Mumbai to Bengaluru. What will be the place of supply for the insurance bought? So any services during the conveyance, we need to take the starting point of the conveyance. But is this a service on board a conveyance? No, this is not a service on board a conveyance. He's just buying the insurance. So insurance. For insurance, we need to apply the general provisions. So what will be the place of supply as per general provisions? Place of supply as per general provisions is location of recipient. So is location of recipient. So what is that location of recipient? So Gurgaon will be taken as the place of supply. So in case of insurance service, actually the nature of service here is insurance services. It is not services on board a conveyance. Okay, so when it will be service on board a conveyance, if it is the service provided by the airline operator or the train operator during the journey, then only it will be called as services on board a conveyance. It is basically here insurance service only. So we need to determine as per general provisions, because for insurance services we don't have any specific provisions. Then question number 3, Mr. R, a resident of Delhi, holds an account in IDICI Bank in Delhi. Mr. R goes to Jaipur for work. During his visit to Jaipur, he takes certain services relating to his account from IDICI Bank in Jaipur in relation to some transaction to be carried out at Mumbai. Again, for banking services, we don't have any specific provision. So we need to determine the place of supply as per general provisions. So we need to take place of supply as per general provisions. And what will be the place of supply as per general provisions? That will be location of recipient. So our resident of Delhi. So location of recipient is Delhi, that will be taken as the place of supply. So even though he goes to Jaipur for work, all those things, but what is the location of recipient? Location of recipient is Delhi, so that will be taken. Even for banking services, so we don't have any specific provision, so general provisions will be applicable, so that will be taken. What if this recipient details not available in the records of the supplier? Then location of supplier will be taken. That's what general provisions is about. Then next one, question number 4. Mr. A, CEO of XY Limited, Mumbai, a company registered in Maharashtra, buys insurance cover for the inventory stored in company's factory located at Ahmedabad, Gujarat, from Excellent Insurance, Chennai, registered in Tamil Nadu. So now simple, again, insurance services. For insurance services, we don't have any specific provisions, so therefore we need to take general provisions. As per general provisions, what will be taken as the place of supply? So place of supply will be location of recipient. So what is the location of recipient here? Mumbai, Maharashtra. So because Mr. A, CEO of XY, Mumbai, Maharashtra, buys the insurance cover, so therefore Maharashtra will be taken as the place of supply. Then number 5, Mr. Rahul from Cochin, Kerala, and Mr. Manoj of Bangalore, Karnataka visit Delhi to provide soft skills training to the employee of a limited company. The training was conducted in hotel in Delhi, and the employees also traveled to Delhi to attend the training. The limited company is registered under GST in Mumbai, Maharashtra. So in case of training and performance appraisal services, there are 3 services where we need to apply B2B, B2C. TOT, training and performance appraisal, organizing an event, transportation of goods or passengers. So this is training and performance appraisal services. So for training and performance appraisal services, so what will be taken? Is it B2B or B2C? B2B. How you know? So because the recipient, who is the recipient here? The company is the recipient. Company is registered under GST in Mumbai. So B2B. So place of supply will be taken as location of recipient. So what is the location of recipient? Mumbai, Maharashtra will be taken as the place of supply. So option B is the answer. What if it is B2C? Location where the training is held. Where the training is held, so the training is held in a hotel in Delhi, that would have become the place of supply if it is B2C. Then question number 6. ABC Private Limited is a company providing online ticketing services for admission to various events. Online ticketing, admission to an event. It has head office at New Delhi and 2 branch offices at Bengaluru and Pune. Bengaluru is for controlling the selling of tickets, and Pune is for printing and dispatching the tickets. The company is selling online tickets for admission to cultural, artistic programs, sporting events. Simple. In case of admission to an event, okay, what will be taken as the place of supply? Location of event. Simple. Location of event will be taken as place of supply. Don't need to check B2B, B2C. Where the event is held, so the sport event scheduled to be held at Hyderabad. So what is the location of event? Hyderabad. So Hyderabad will be taken as the place of supply. Then next one. Question number 7. Mr. Radheshyam, a chartered accountant registered in Delhi, wished to purchase an office in Bengaluru. Radheshyam took financial services from ICICI Bank registered in Gurugram, in which he is an account holder, to procure loan for the office property situated in Bengaluru. Corporate office of the bank is in Mumbai. He paid 20,000 as processing fee for the loan. Again, simple, banking services. So in case of banking services, so we have to determine place of supply as per general provisions. So what will be taken as the place of supply as per general provisions? So B2B or B2C, we should check. B2B, location of recipient. Here Radheshyam is registered in Delhi, so therefore location of recipient, so that is Delhi, will be taken as the place of supply. That's the answer for this. So I request you to please go through the summary related to place of supply in my rocket revision video. In that I have discussed how easily we can remember the place of supply provisions. You can go through that. If you want the detailed provisions related to place of supply, you can visit the fast track batch videos which are there in the YouTube. Then we are moving on to the next chapter, that is exemptions from GST. In this, the first question, services by way of admission to is not exempt from GST. So admission not exempt, they are asking not exempt. Museum, National Park, Tiger Reserve is exempted irrespective of the ticket amount. recognized porting event where the ticket cost is 600 per person is taxable. So if it is less than or equals to 500, if it is less than or equals to 500, then it will be exempted. As it is 600 rupees, due to that reason it will be taxable. So option D is the answer. Which of the following is a recognized system of medicine for the purpose of exemption for healthcare services? So allopathy, Unani, Siddha, all these three are recognized. So there are various recognized system of medicine: allopathy, naturopathy, homeopathy, Siddha, Unani, Ayurvedic, yoga. All these are recognized system of medicine. So therefore, due to that reason, these three are covered under recognized system of medicines, and that healthcare services will be exempted. Then an exempt supply includes supply of goods or service which attracts nil rate. Yes, nil rate will be called as exempted. Non-taxable will also be called as exempted. Supply of goods or service or both which are wholly exempt from tax under section 11. So yes, that is also treated as exempted. All these three will come under the meaning of exempted supplies. Then question number 4, which of the following services are exempt from GST? Admission to a circus where entry ticket is 550 per person, taxable. So if it is less than or equals to 500, circus less than or equals to 500 is exempted. Here it is more than 500, therefore it will be taxable. Interest charged on outstanding credit card balances. So generally interest on loans, advances, deposits is exempted. However, if it is interest on account of credit card, so then it will become taxable. Service by an organizer to any person in respect of a business exhibition held in India, taxable. So if the business exhibition is held outside India, then it will be exempted. Services by foreign diplomatic mission located in India, yes, it is exempted. That is UN organizations or specialized agencies of UN, embassies or consulates. These are called as foreign diplomatic missions. If any service is provided by them, it will be exempted, and basically they will be called as UIN holders. So because on their inward supply, whatever GST they paid, they will be getting refund. So for that, one recognition will be given to them, one identification is given to them. That is what? UIN, unique identification number. So their services provided by them, outward supplies of them, will be exempted. So option D is the answer. Which of the following services are exempt from GST? Services by an artist by way of performance in classical art form of painting or sculpture making. For painting or sculpture making, we don't have any exemption, so it will be taxable. Service by an artist by way of performance in modern art form, no, it should be classical art form, so or folk, then only it will be exempted. So here it will be taxable. Service by an artist by way of performance in folk or classical form of music, dance or theatre, in which the consideration thereof exceeds 1.5 lakhs, taxable. So the consideration should not exceed 1,50,000. So fourth one is the correct answer. It is exempted. So first there should be a performance artist in folk or classical art form of music, dance or theatre, where the consideration should not exceed 1.5 lakhs. One more condition is also there, that they should not be acting as a brand ambassador. Then question number 6, services by way of transportation of pulses. So transportation of pulses will come under food grain. So therefore it will be exempted. Military equipments, defense equipments, exempted. Electric equipments, we don't have any exemption, that will be taxable. Again, jaggery will not come under agricultural produce. So due to that reason, we don't have any exemption. It will not come under food grains also. So therefore only 1 and 2 is exempted, and the next 2 will be taxable. Then next question number 7, warehousing service of. So warehousing of agricultural produce, then warehousing of this fruits and vegetables, so is exempted, that is all agricultural produce. And warehousing of cereals and pulses, even though not agricultural produce. Warehousing of minor forest produce, even though not agricultural produce. Warehousing of rice, even though not agricultural produce, is exempted. So we need to understand here. So warehousing of, what is that? Agricultural produce, non-agricultural produce. Warehousing of agricultural produce, warehousing of agricultural produce. What is the answer? It is always exempted. Warehousing of agricultural produce is exempted. Other than agricultural produce, other than agricultural produce. If it is other than agricultural produce, again it is divided into 2. Suppose if it is minor forest produce, or if it is minor forest produce, or if it is rice, warehousing of rice, or cereals and pulses, these 3, even though not agricultural produce, it is also exempted. What about the remaining? So remaining goods, so which is not agricultural produce, will be taxable. Okay, then first wheat is agricultural produce, so exempted. Apples, agricultural produce, exempted. Pulses, agricultural produce, exempted. Pulses, even though not agricultural produce, but for pulses we have separately exemption now. Then potato is also exempted, so option A is the answer. Then next one is also same, service by way of warehousing of cereals and pulses, specifically even though not agricultural produce, exempted. Fruits is agricultural produce, therefore exempted. Processed coffee is not agricultural produce, even it is not given under the list for exemption, therefore it will be taxable. So 1, 2 and 3 is the correct answer. So just remember this chart, so this will be helpful for you in exam. Then next, question number 9, which of the following is treated as exempt supply under GST Act? Sale of liquor. Sale of liquor is actually non-taxable. Non-taxable will come under exempted, so therefore it is exempted. Supply of healthcare service by a hospital, exempted. Transmission of electricity, transmission and distribution of electricity is exempted. So all these three are exempted. Then next, which of the following services are not exempt from GST? They are asking not exempt from GST means taxable. Yoga camp conducted by charitable trust. So yoga camp, any services provided by charitable trust, if it is a charitable activity, it is exempted. Advancement of religion, spirituality and yoga is given in the list of charitable activities. Due to that reason, it will be exempted. Services provided by business correspondent with respect to savings bank account in rural area branch, exempted. If it is urban area branch, then it will be taxable. Service provided by card blood bank for preservation of stem cells. Previously it was exempted, now it is made taxable. We don't have any exemption with respect to this. Then service provided by one recognized sports body to another recognized sports body is exempted. For example, if BCCI is providing services to Indian Hockey Federation or Inter-University Sports Board, so one recognized sports body to another recognized sports body, that will become exempted. So therefore they are asking which of the following is not exempt. So option C is the answer. Then question number 11, which of the following supply of services are exempt from GST? Testing of agricultural produce. So any service in relation to agriculture or agricultural produce is exempted. So therefore it is exempted. Supply of farm labor, service in relation to agriculture, exempted. Warehousing of agricultural produce, service in relation to agricultural produce. So remember, any service in relation to agriculture or agricultural produce, agricultural produce is exempted. So we don't have any taxability with respect to this. Then therefore the answer is option D. Then question number 12, Shahil, a resident of Delhi, is having a residential property in Vasant Vihar, Delhi, which has been given on rent to Sohan unregistered for rupees 50 lakh per annum for use as residence. Determine whether Shahil is liable to pay GST on such rent. So he is having a residential property where in Delhi. So residential property given on rent to an unregistered person for residential purpose is exempted. So there is no GST on that. So there is no GST. Service by way of residential property for residential purpose to an unregistered person is exempted. Even to a registered individual for his family stay is also exempted. What if Mr. Sohan is registered and is using it for his family stay? Even then it will become exempted. Then question number 13, which of the following service is exempt under healthcare services provided by clinical establishments? Chemist shop, in the hospital selling medicines to public at large, taxable. So that will not be coming under healthcare services. Food supplied by canteen run by hospital to inpatients. Inpatients means those who are admitted in the hospital, that will be part of healthcare services and it will be exempted. Food supplied to visitors or attendants, so that is not healthcare service, that will be taxable. Advertisement services provided by hospital to a pharmaceutical company for their asthma pump by displaying it prominently in the hospital, that is not a healthcare service, that will be taxable. So therefore only option B is the correct answer. Then we are moving on to the next chapter, that is time of supply. chapter that we are going to see is time of supply. In this time of supply, the first question, determine the time of supply of goods with the help of the information provided below. So May 11, so time of supply in case of goods, what is the provision in case of goods? In case of goods, other than those who are opting for composition scheme, the time of supply will be due date of invoice or actual date of invoice, whichever is earlier. So due date of invoice or actual date of invoice, whichever is earlier, will be taken. So first we need to find what is the actual date of invoice. So invoice, what is the data? Dia Enterprises issues invoice for goods taxable on reverse charge basis. So what we have discussed is FCM. This is in case of FCM, but we need RCM. So in case of RCM, what will be taken as the time of supply? Earlier of 3 dates in case of goods. So date on which goods are received, date of receipt of goods, or date on which payment is made to supplier, or 31st day from date of invoice. 31st day from date of invoice, whichever is earlier will be taken. So Dia Enterprise issues invoice for goods taxable on reverse charge basis to Priya Constructions Limited. So what is the date on which invoice is given? May 11. So May 11, so we need to take 31st day. So what is 31st day to May 11? So May 11, so if you take 30 days, that will be June 11 plus 1. So June 12 will be taken so as 31st day. Okay. So June 12 will be taken as 31st day next month. So 31 days na. So 31st day will be June 12th. And date on which payment is made to supplier. Priya Constructions receives the goods on May 12. So May 12 is the date of receipt of goods. Date on which payment is made. So Priya Constructions issued check and records payment in his books of accounts. Payment is debited from the bank account of Priya Construction. So what is the meaning of date of payment from the recipient point of view? Date of entry in the books or date of debit in their bank account, whichever is earlier. So May 30 or May 31, whichever is earlier is May 30. So therefore, out of these 3 dates, May 12, May 30 and June 12, the earlier date is May 12. So that will be taken. So remember, date of payment from supplier point of view is date of entry in the books or date of credit in their bank account, whichever is earlier. Whereas from recipient point of view, so date of entry in the books or date of debit in their bank account, so whichever is earlier will be taken. So this is the treatment for this question number 1. Then question number 2, the time of supply of service in case of reverse charge mechanism. Service under RCM. Service under RCM, it is simple. So that is date on which payment is made to supplier or 61st day from the date of invoice. 61st day from date of invoice, whichever is earlier will be taken. So what is the date of payment? So date of payment or 61st day, date following 60 days. So earlier of A, B. So date of payment means date of entry in the books or date of debit in their bank account. So earlier of A, B and C will be taken as answer. Then question number 3, Miss Pearl is a classical singer. She wants to organize a classical singing function. So she booked an auditorium on 10th August for a total amount of 20,000. She paid 5,000 as advance on that day. The classical singing function was organized on 10th October. The auditorium owner issued invoice to Miss Pearl on 25th November amounting to 20,000. Pearl made balance payment of 15,000 on 30th November. What is the time of supply? This is service. So what is the time of supply in case of service? If the invoice is issued within 30 days, then the date of invoice will be taken or date of payment, whichever is earlier. If the invoice is not issued within 30 days, then completion date or payment date, whichever is earlier. So here, when the function is held, so 10th October, and when the invoice is given 25th of November, so invoice not issued within 30 days. So because 30 days is the time limit or due date of issuance of invoice. So invoice not issued within 30 days. Invoice not issued within 30 days. So what will be taken as the time of supply? The time of supply will be date of completion. So what is the date of completion? So date of completion is 10th October. 10th October or date of payment. So there are 2 payments. One payment of advance is on 10th of August and the other payment, so 10th October for other payment, also same provision, date of completion or date of payment. What is the date of payment for the other amount? So 30th of November. So whichever is earlier whichever is earlier. So for advance, that is 5,000. So it will be whichever is earlier, 10th August, whereas here it is 10th October. So option C is the answer. For advance 5,000, it is 10th August. For remaining amount of 15,000, it will be 10th October. So option C will be taken as the answer. Then next, question number 4. In case of supply of goods for rupees 5 lakhs, following information is provided. Supply of goods. Advance received on 1st April, invoice, goods removed. What is the time of supply of goods where the tax is payable under forward charge? In case when the tax is payable under forward charge, the answer is simple. Actual date of invoice or due date of invoice. Due date of invoice, whichever is earlier. So what is the actual date of invoice when the invoice is actually issued? 15th of April. What is the due date of invoice? So if supply involves movement of goods at the time of removal, what is the time of removal? 25th of April. Which is earlier? 15th of April is the earlier date. Then question number 5. Shyam Limited, located in Mumbai, is receiving legal services from a lawyer, Mr. Gyan, registered under GST. The aggregate turnover of Shyam Limited in the preceding financial year is 42 lakhs. So advocate services or legal service is covered under RCM. So this is services under RCM. In case of service under RCM, what will be taken as the time of supply? The information regarding date of payment, etc. is as follows. What is the time of supply of service? In case of service under RCM, date on which payment is made to supplier or 61st day from date of invoice, whichever is earlier will be taken. What will be taken as the date of payment? Date of payment will be date of entry in the books. So who is the recipient here? Shyam Limited is the recipient. So date of payment entered in the books of accounts of Shyam Limited is 1st May. Date of debit is 5th May. So which is earlier? So 1st May will be taken as the date of payment. And 61st day from the date of invoice. So 15th April. So 15th April we need 61 days. So 15th April. So plus 15 days. So plus we have April, May, 31 days. So already here and the remaining days. So April, already May is over and June it will be somewhere in June. But whichever is earlier is what? 1st May itself. See, the logic is simple. It is 15th April, 61st day. 15th April plus 15 days itself. April is over. Plus 31 days, May is over. And so the remaining days come somewhere in June. But here, 1st May itself is the earlier date. So 1st May will be taken as the answer. Then question number 6. Miss Pearl is a classical singer. Already we discussed this, but little change here. I think, no, it is the same. She booked the auditorium on 10th August. Already we saw this. So this is same as question number 3. So 10th August for 5,000, 10th October for 15,000. So same as question number 3. Same as question number 3. It just got repeated. Then next question is in value of supply. So the next chapter we are discussing now, value of supply. Question number 1. Which of the following are not includable in the value of supply in terms of section 15? Not includable. So yes. So CGST, SGST, UTGST will not be includable. So as per 15.2a, any taxes, duties and cess by whatever name called other than GST will be included. But GST will not be included. Commission will be included as per 15.2c. And interest will be included as per 15.2d. And payments made to third parties on behalf of the supplier, any amount made to third parties on behalf of supplier will be included in 15.2b. Any amount that the supplier is liable to pay but which is paid by the recipient. Then question number 2. Piramal Limited has 24% shareholding of Ankul Limited. Piramal Limited supplied goods to Ankul Limited during the current year. So whether we will take transaction value in this case. 24% means not related. So when there are two companies, when there exists a control, control exists when the investment is greater than or equal to 51%. So in this case 24%. So it is not a related party transaction. It is not a related party transaction. As it is not a related party transaction, the transaction value will be applicable. What if it is a related party transaction? Option D is the answer. Other than transaction value, since supplier and recipient are related, like that will be applicable if it is a related party transaction. Now we are moving on to question number 3. Messrs. Gemini Exports has sold scrap amounting to 3,84,000 excluding TCS at 1% and Income Tax Act. The scrap was transported to the place of business of the recipient, for which Messrs. Gemini Exports charged additional 5,100 as transportation charges. All the given amounts are exclusive of GST. Determine the value of supply. First we will take transaction value. So what is the transaction value? 3,84,000 will be taken as a transaction value. TCS at the rate of 1% and Income Tax Act. So as per CBIC circular, it is clearly mentioned that TCS is an interim levy not having the character of tax. Therefore, it is not required to be included in the value in terms of 15(2)(a). So therefore, this TCS will not be coming. Whereas this transportation charges, so these transportation charges of 5,100 rupees is to be included. So therefore, what is the transportation charges? The transportation charges will be 5,100 rupees. So if you do the total, so because as per 15(2)(c), this transportation charges, that is incidental expense or any other expenditure incurred by the supplier and charged to the recipient before or at the time of supply of goods or supply of services, should be included in the value. So this is 5,100 was the transportation charges. So if you see, the answer for this is 3,89,100 will be taken as the answer. So option C is the answer for this question number 3. Then next one, question number 4. The director of Messrs. Carrier Limited provided premises to it at a monthly rental of 2,50,000, which is registered as principal place of business from where it carries out the business operations. So director is giving the premises on rent. Carrier wants to understand whether the monthly rent of 2,50,000 should be termed as transaction value for the determination of value of supply. Will the answer differ if the premise is provided by independent supplier, that is Messrs. Culp Limited? Okay, so here if you see, whenever the director is providing services to the company, director and company are treated as related. Okay, so director and company are treated as related. So when they are treated as related, so definitely transaction value not applicable. So transaction value not applicable, because between related parties, so price is sole consideration, supply and recipient should not be related. So if this is related, if this is a related party transaction, transaction value not applicable. So therefore transaction value will be applicable in this case. First case, no. What if the person is an independent supplier, that is Messrs. Culp Limited is giving, so then the transaction value will be applicable. So because two conditions should be satisfied, price must be the sole consideration, supplier and recipient should not be related. Here director and company are treated as related. Under which points they will come under related? Such persons or officers or directors of one another's business is there na? Under that point, director and company will be treated as related. Then next, question number 5. Discount given after the supply has been effected, so it's a post supply discount, is deducted from the value of taxable supply if such discount is given as per agreement entered into at or before the time of such supply. Such discount is linked to the relevant invoice and proportionate ITC has been reversed by the recipient. It's true. First, the discount, post supply discount is allowed as reduction if the discount is agreed between the parties before or at the time of such supply. Okay, and it is linked to the relevant invoices, and proportionate ITC is reversed by the recipient, because whenever the credit note is given by the supplier to the recipient, so how it will be linked to the relevant invoices? By giving a credit note. So whenever the credit note is given by supplier to recipient, so based on the credit note, the recipient has to reverse the ITC. So all these three conditions should be satisfied. Then next one, we are moving on to input tax credit chapter. In this question number 1, a supplier takes deduction of depreciation on the GST component of the cost of capital goods as per Income Tax Act. So the supplier can avail ITC or not avail ITC. So they are claiming depreciation even on the GST component. So section 16 subsection 3 says that if depreciation under Income Tax Act is computed on GST component, then that cannot be taken as ITC. Then question number 2, Mr. Raghu avails service of Mr. Raja, a chartered accountant, as under audit of financial accounts of Mr. Raghu, tax audit, income tax return filing of Raghu's wife. So this income tax return filing of Raghu's wife is a personal expenditure. So we cannot take ITC with respect to that. But the audit of financial accounts and tax audit and annual account filing is related to the course of furtherance of business, and we don't have any blocked credits. So ITC can be availed. ITC available. So whereas in this case on this 5,000 rupees, ITC not available. Okay, all the above amounts are exclusive of taxes, and the applicable rate of GST on this service is 18%. The accountant of Mr. Raghu has booked the entire expense of 70,000 plus GST in his books of accounts. Let them book the expenditure, but it is not a business expenditure. Mr. Raghu is eligible to take input tax credit of only on 55,000 and 10,000. That is 65,000 into what is the rate of GST? 18%. So 65,000 into 18%, that is 11,700 can only be taken as ITC because the other amount is not in the course or furtherance of business. Then question number 3, input tax credit is not available in respect of services on which tax has been paid under composition levy. Yes, it is not available. Goods distributed as free samples, ITC not available. Goods used for personal consumption also, ITC not available. So all these 3 cases, ITC not available. Then next one, question number 4. If the goods are received in lots or installments, when we can take ITC? Only on receipt of last lot or installment. ITC can be availed upon receipt of last lot or last installment. Then Mr. A has a tax invoice dated 21/2023 of service received by him. Its input tax credit is lost if ITC not availed on or before. What is the time limit for availment of ITC? 30th November of the succeeding financial year. What is the succeeding financial year? 30 November 2023, because January 2023 means it is financial year 22-23. So 30th November 2023 or date of filing annual return. So whatever is the actual date of filing annual return, so whichever is earlier will be taken. So 30th November 2023 or date of filing annual return, whichever is earlier, as per 16 subsection 4. So this provision is given in 16 subsection 4. Then question number 6, ITC of motor vehicles used for making dash is allowed. ITC of motor vehicles used for transportation of goods, yes, allowed. So used for taxable supply of transportation of passengers, allowed. Imparting training on driving, allowed. So generally motor vehicles is block credit, but these 3 are exceptions. So ITC available with respect to this. So blocked credits information is given in 17.5, and for block credit there are some exceptions. Here it comes under the exceptions due to which ITC available. Then question number 7, PZY Limited is engaged in manufacturing of motor car. The company paid following amount of GST to its suppliers against the invoices raised to it. Compute the amount of ineligible input tax credit under GST law. The general insurance taken on cars manufactured by PZY. Generally, insurance services is blocked credit, but we don't have any restriction to manufacture of the cars. So therefore, ITC available in this case. Then buses purchased for transportation of employees, seating capacity 23. As capacity is more than 13, first of all, it's not a block credit. So ITC available in this case. Life and health insurance for employees under a statutory obligation. Generally, life insurance and health insurance is block credit. As this is incurred under a statutory obligation, ITC available. Outdoor catering in Diwali Mela organized for employees. So food and beverages, outdoor catering is a block credit, and it is not coming under the exceptions here, due to which ITC not available. So 1 lakh plus 25,000 plus 6,000. So that is the answer. So general insurance, I think 1 crore it is. General insurance is 1 crore. General insurance taken on cars manufactured, we can take ITC. 1 crore, then 25 lakhs and 6 lakhs. Okay. So 1 crore 25 plus 6 is 31. So actually they have given the answer as 3,50,000, which is not the correct answer. So here the amount of ineligible ITC. See, actually if the question is what is the amount of eligible ITC, then 1 crore 31 lakhs is the answer. But the question you read properly, ineligible ITC. Ineligible ITC is 3,50,000. What if it is given as eligible ITC? If it is given as eligible ITC, then the answer will be 1 crore 31 lakhs. So sometimes reading the question is crucial, okay? Because what happens, we will think that it is ITC available and we will select 1 crore 31 lakhs, but the answer is 3,50,000 because the question is ineligible ITC. Then next one. Question number 8. Input tax credit shall not be available in respect of goods used for personal consumption. Yes, ITC not available. Then membership of club provided by employer to employer as per company's internal policy. Membership of a club, health and fitness center, if it is under a statutory obligation, ITC not available. This is not under a statutory obligation, so therefore if it is under a statutory obligation, ITC available, but here it is not under statutory obligation, so ITC not available. Travel benefits extended to employees on vacation, such as leave or home travel concession as per company's internal policy. Again, so travel benefits extended to employees on vacation, if it is under a statutory obligation only, ITC available. As per company's internal policy, so ITC not available. All these cases ITC not available, so option D is the answer. Then question number 9, TT Private Limited registered in Rajasthan furnished following information for the month of June. Interstate sale of goods for 1,25,000 to JJ Enterprises registered in Haryana. So interstate sale of goods 1,25,000. So what is the question that they are asking? So GST liability payable in cash. Okay. So interstate sale means, so there will be IGST liability. So CGST, SGST and IGST liability. How much is the IGST liability in this case? So 1,25,000. 1,25,000 into what is the rate of GST? 18%. That will be 22,500. Then next one, interstate purchases. This is purchases from XYZ company registered in Punjab for 40,000. Where is this person located? Rajasthan. So it is IGST credit. Okay. So this is liability. This is liability, and we have the ITC. So in that ITC, 40,000 into 18%, that will be 7,200. We have IGST credit. Then intrastate purchases registered in Rajasthan, 65,000. So 65,000 into 9%. So what is that? 5,850. So CGST credit 5,850, SGST credit 5,850. So then IGST liability 22,500. So we can adjust all these three ITCs for payment of IGST. So 22,500 minus, for 7,200 we will set off, then 5,850 minus 5,850. So 3,600 is the net liability. So the net liability after adjustment of all these three ITCs comes to 3,600. So 3,600 IGST is the answer. Then next one is registration chapter. In this registration chapter, first question, within how many days a person should apply for registration under GST? Apart from provisions of voluntary registration, what is the time limit? 30 days from the date a person is liable to get registered. However, in case of CTP and NRTP, casual taxable person and non-resident taxable person, it should be at least 5 days before commencement of business. So in this case, the answer is B, within 30 days from the date when he becomes liable for registration. Then next one, registration certificate granted to casual taxable person or NRTP will be valid for, what is the period of validity? 90 days, and it can be extended for a further period of 90 days, but it is up to 90 days. Up to 90 days means period specified in the registration application or 90 days, whichever is earlier is the answer. Okay, so up to 90 days. Suppose if they ask for 30 days only they will be getting. That's why earlier of A or B. Then question number 3, what is the validity of registration certificate granted under GST for a normal taxpayer? There is nothing like that called validity. So it will be till it is cancelled, it will be valid. So 1 year, 2 years is wrong. So valid till it is cancelled. Then question number 4, THARUN'S Limited, an e-commerce operator, is liable to collect tax at source under section 52 and is registered under GST. However, it is going to close its operations from next month. Okay. So e-commerce operator, TCS deductor. No option is available for THARUN'S to suo motu apply for cancellation of registration under GST. Only proper officer can initiate cancellation of registration. False. So they can make application, even TCS deductor also can make application for cancellation of registration if they are no longer liable to be registered. So THARUN'S can apply in writing for cancellation if it is no longer required to collect tax at source. So this is correct. This is true statement. Registration can be cancelled if proper officer is satisfied that THARUN'S is no longer liable to collect. So either suo motu he can make application, this THARUN'S Limited can make application, or proper officer can initiate cancellation of registration. So both 2 and 3, either 2 or 3 is the correct answer. So there are some cases, 3 cases, where either the registered person can make application for cancellation or proper officer can initiate cancellation of registration. What are they? First, so transfer of discontinuance of business. Number 2, change in constitution resulting in change in permanent account number and no longer liable to be registered. So in the second and third case, it is no longer liable to be registered. Either he can make, that is the person can make application for cancellation, or proper officer can initiate cancellation of registration. Then question number 5, Xylo and Company has 3 branches in Jalandhar, Amritsar and Ludhiana in the state of Punjab. Amritsar and Ludhiana branches are engaged in supply of garments and Jalandhar branch is engaged in supply of shoes. Which of the following operations is or are legally available for registration? So Jalandhar, Amritsar and Ludhiana, all these 3 places are in Punjab. Okay. So within the state, when they have multiple places of business, either they can go for single registration, or with respect to each place of business, they can get a separate registration. So Xylo and Company can obtain single registration for Punjab state, declaring any one of the branches as principal place of business and the other 2 branches as additional place of business. Correct. This option is there. They can obtain separate registration for each of the 3 branches. Yes, this is also there. They can obtain one GST registration for shoe business and another GST registration which is common for garments business, Amritsar and Ludhiana. No. So only 1 and 2 is the correct answer. They are telling all the 3 no, either 1 or 2. So option C is the answer. I'll tell you why. We don't have now registration for different business verticals. So you can go for single registration or separate registration with respect to each place of business. It's not like, different businesses, based on that I can go for registration. That option is not there. So here they have given all the 3, but no, only either 1 or 2 is the correct answer. Question number 6. Which of the following persons is mandatorily required to undergo Aadhaar authentication? Department of Post, a central government department. So Department of Post, so generally government is not required to undergo authentication. Government, so who are all not required to undergo authentication? Not a citizen of India, other than Karta of HUF, and then other than managing or authorized partner, and members other than authorized signatory, central government, state government, local authority, public sector undertaking, and statutory body, and finally UIN holder. So here, Department of Post, government, not required to undergo. Municipal Corporation of Delhi is also government, local authority. They are not required to undergo. ICI is a statutory body. They are not required to undergo. Supplier of Pan Masala in Delhi, yes, they are required to undergo other authentication. Then next one, a non-resident taxable person, NRTP, is required to apply for registration at least 5 days before commencement of business. Not only NRTP, even CTP also. So CTP, NRTP can make application for registration at least 5 days before commencement of business. Then question number 8. Mr. Ram, a jeweler registered under GST in Mumbai, wants to sell his jewelry in a trade expo held in Delhi. Trade expo held in Delhi. Which of the following statement is false in his case? So he wants to go to Delhi. So means he need to get a CTP registration. He needs to get registration in Delhi as casual taxable person. True. He need to pay advance tax on estimated tax liability. Yes, whenever they go for CTP registration, so depending upon number of days that they stay in that place, they need to estimate their liability, and that liability, estimated net tax liability, they need to pay as advance tax. He needs to mandatorily have a place of business in Delhi. False. Not necessary for a CTP registration. He needs to file GSTR1, GSTR3B for Delhi, GSTN for the month of quarter, as the case may be when he gets registered in Delhi. True. So for a CTP, regular returns only will be applicable. So this is also a true statement. So only option C is wrong. Then question number 9. The registration certificate granted to non-resident taxable person is valid for dash days from the effective date of registration or period specified, whichever is earlier, 90 days. 90 days. And it can be extended for a further period of 90 days, but that they did not ask. So only 90 days is the answer. Then question number 10. Mr. Z of Himachal Pradesh starts a new business and makes the following supplies in the first month. Intrastate supply of taxable goods 17 lakhs, exempted services 1 lakhs, interstate supply of taxable goods 1 lakh. Even though the total is 17, 18, 19 lakhs, it does not exceed the threshold limit for registration. Even then, they are compulsorily required to get registered. Why? Because they are making interstate supply of taxable goods. So therefore, Mr. Z is liable to obtain registration as he is making interstate supply of goods. Compulsory registration section 24 is applicable in this case. Then question number 11. The person making interstate supply of goods from Madhya Pradesh is compulsorily required to get registered under GST, provided such goods are not notified handicrafts nor predominantly handmade notified goods. If their aggregate turnover exceeds 40 lakhs or irrespective of aggregate turnover. Compulsory registration means irrespective of aggregate turnover. So option D is the answer. Then within how many days an application for revocation of cancellation of registration. Revocation of cancellation of registration is now 180 days. 90 days plus it can be extended for a further period of 180 days. So here this is wrong because now we have an amendment related to this. So the period is now 90 plus it can be extended for a further period of 180 days. So this is not the correct answer. Okay, now there is a change in the provision. Now we are continuing with question number 13. How is the aggregate turnover calculated for determining threshold limit for registration? So usually aggregate turnover will include what? Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, but it will exclude inward supplies on which GST is payable under RCM. Aggregate turnover includes aggregate value of taxable supplies. No, it includes even exempted supplies also, excluding the value of inward supplies and exempted supplies and export of goods or services. So this is correct, but GST is also excluded from the meaning of aggregate turnover. So that's why this is wrong. Then aggregate turnover of all taxable supplies, excluding the value of inward supplies on which tax is payable by a person on reverse charge basis, exempted supplies, interstate supplies, computed for each state separately. No, it will be computed on a all India basis. And aggregate value of all taxable intrastate supplies, even interstate supplies also will be coming. So this is wrong. So this is the correct answer. All taxable supplies, exempted supplies, exports, interstate supplies having same permanent account number computed on a all India basis, and excludes inward supplies on which tax is payable under RCM, and even it will exclude taxes, that is CGST, SGST. So option D is the answer. Then question number 14. Ram, an individual based in Gujarat, is in employment and earning rupees 10 lakhs as salary. He is also providing intrastate consultancy services to different organizations on growth and expansion of business. So basically he is in employment and is earning 10 lakhs as salary. Now his turnover from supply of such service is 12 lakhs. Determine whether Ram is liable for taking registration as per the provisions of the Act. So 10 lakh salary is not a supply. So salary is not a supply. As salary is not a supply, it will not be included in the aggregate turnover. So the aggregate turnover is only 12 lakhs. And as the applicable threshold limit, so they have not given, he is engaged in services. So therefore applicable threshold limit, so is 20 lakhs. And what is his aggregate turnover? Just 12 lakhs. As aggregate turnover has not exceeded the threshold limit, so therefore they are not required to get registered. So not a supply, it will not be included in the aggregate turnover. Then question number 15. Which of the following statements are correct? Revocation of cancellation of registration under SGST or UTGST Act shall be deemed to be revocation of cancellation of registration under CGST Act. So this statement is true. Okay, this statement is true because whenever there is a cancellation of registration in one law, it is deemed to be cancellation of registration under other law also. Cancellation of registration under SGST Act shall be deemed to be cancellation of registration under CGST Act. So this statement is also true. Revocation of cancellation of registration under Act shall not be deemed. No. So cancellation of registration shall not be deemed. No. So 1 and 2 is the correct answer. Then next one. Question number 16. Mr. X, a casual taxable person, is not involved in making supply of notified handicraft goods or predominantly handicraft notified products. Which of the following statement is true for casual taxable person? As per section 24, a casual taxable person is compulsorily required to get registered unless they are engaged in trading in handicrafts. Okay. So X has to compulsorily get registered irrespective of threshold limit because of section 24. What if they are engaged in supply of handicraft goods? They are required to get registered only if their aggregate turnover exceed threshold limit, even though casual taxable person. Who is a casual taxable person? The person who comes from one state to another state and who is not having any physical place of business in a state. So, and he makes supplies in that state is known as a casual taxable person. Then question number 17. P Limited has its registered office under Companies Act 2013 in the state of Maharashtra, from where it ordinarily carries on its business of taxable goods. It also has a warehouse in the state of Telangana for storing the said goods. So they are having place of business in Maharashtra and Telangana. So what are the place of business? So Maharashtra and Telangana, both A and B are treated as place of business. Place of business means every place from where the business is ordinarily carried out, and it also includes a warehouse or a agency office, etc., or a representative office or a place from where the transactions will take place. So godown or warehouse is also treated as place of business. Now we are moving on to the next chapter, chapter number 10, tax invoice, credit notes and debit notes. In this, the first question, which of the following statements is or are incorrect under GST law? If the supplier has erroneously declared a value which is more than the actual value of the goods, then he can issue a credit note for the same. True. So to reduce the invoice value, the credit note will be given. Then second, if a supplier declared some special discount which is offered after the supply is over, okay, discount is given after the supply, so it's a post supply discount, then he cannot issue a credit note for such discount offer. So post supply discount, supply declared, so it's a post supply discount, but the terms are not agreed before at the time of supply. So true, credit note cannot be issued, because post supply discount, credit note can be issued if the terms are agreed before at the time of supply. Here it is declared itself after supply, so terms are not agreed before at the time of supply. If quantity received by the recipient is more than what has been declared in the tax invoice, then supplier can issue a debit note for the same. True. That is, actually I need to supply 100 units, but I supplied 120 units, but for 100 units I raised the invoice. Now I want to increase the invoice value, for which the document will be called as debit note. Then fourth point, there is no time limit to declare the details of debit note in the return. So debit note needs to be declared in the return. There is no time limit to give the debit note. But once a debit note is issued, in the month in which it is issued, it should be shown in the return. Okay. In the month in which debit note is issued, should be declared in GSTR1. The question here is not about, so no time limit to declare. So declaration, they have to do it. So therefore this point 4 is incorrect statement. So answer is option C. Then next question, during the month of May, Z Limited sold goods to Y Limited for 2,55,000 and charged GST 18%. However, owing to some defect in the goods, Y Limited returned some of the goods by issuing a debit note of 40,000 in the same month. Z Limited records the return of goods by issuing a credit note of 40,000 plus GST in the same month. So same month they have given. What is the GST liability? Simple. 2,55,000 minus 40,000. So why 40,000? In the same month it got reduced now. So 2,55,000 minus 40,000. So into rate of GST 18%, because both are excluding GST. 40,000 plus GST, 2,55,000 plus GST. So therefore it will be 2,15,000 into 18%. So how much it comes to? So it will be 2,15,000 into 18%, 38,700 will be taken as the answer for this. Then question number 3, in case of taxable supply of services by a non-banking financial company to other than a distinct person, invoice shall be issued within a period of, what is the time limit for issuance of invoice? banking company including NBFC, banking company including NBFC, banking sector, or insurance sector, banking sector or insurance company. What is the time limit for issuance of invoice? Within 45 days, within 45 days from date of completion, the invoice needs to be issued. That is the answer for this. What if it is a distinct person? If it is a distinct person, on a quarterly basis, they need to give the invoice. Okay, that is one point. Then question number 4. Invoice shall be prepared in dash in case of goods. It will be prepared in triplicate. And in case of services, it will be prepared in duplicate. Okay, for goods, it will be triplicate. For service, it will be duplicate. And in case where the e-invoice is prepared, so this duplicate or triplicate is not necessary. So just the e-invoice is sufficient. Then question number 5. Where the goods being sent or taken on approval for sale or return or removed before supply takes place, the invoice shall be issued. So what is the time limit for issuance of invoice in case of sale on approval or on return basis? 6 months from the date of removal or the date of supply. So when the date of supply, whenever it is accepted by the recipient, it is supply. So whichever is earlier. So before at the time of supply or 6 months from the date of removal, whichever is earlier. So this is due date of invoice given in section 31 subsection 7. Then Subhash and Co, a registered person, supplies taxable goods to unregistered person. So taxable goods are supplied to unregistered persons. It need not issue tax invoice if the value of supply is less than 200. So neither tax invoice, okay, neither tax invoice nor bill of supply, neither tax invoice nor bill of supply in case of low value supplies. In case of low value supplies. What is low value supply? Low value supply means, so value less than 200. Less than 200 is only called as low value supply, not 200. So 150 is the correct answer. Then next, we are moving on to the next chapter, accounts and records, which is a newly added chapter. What course of action can be adopted if there is any incorrect entry made in the books of accounts other than those of clerical in nature? So whenever there is an incorrect entry, so that needs to be scored out and which needs to be attested. For example, we are preparing a ledger. So say invert details. By mistake we entered. So now we need to score out and that should be attested. Suppose if it is electronic, we need to maintain a log. So log of all the incorrect entries, whatever we have made correction, that log we need to maintain like a track changes. Usually in document, Microsoft Office documents, whenever you make any changes, if you turn on the track changes mode, it will show as to what is the mistake that was there and what was in rectified. Like that, a log needs to maintain if it is electronic records. If it is physical records, remember accounts and records under section 35 can be maintained in electronic form or it can be maintained in physical form. If it is physical records, so then if there is any incorrect entry, so it should be scored out under an attestation. Then next, question number 2. A registered person is required to maintain books of accounts relating to I formats. I formats. Okay. So invert supply details. So supply of goods or services. So all these things required. Invert supply and outward supply. Receipt of goods or services. That's what invert supply, outward supplies. Stock of goods. Yes. Stock of goods also needs to maintain. And ITC, tax details. In the tax details, both input tax and output tax. So all these records are required to be maintained by a registered person. So I for inward supplies, F for foreign trade, that is import and export, O for outward supplies. Outward supplies is like whatever is the outward supplies, and on RCM inward supplies on which GST payable, manufacturing and production related, A for advances received adjusted, and T for tax details, input tax and output tax, and S for stock details. Then question number 3, who is not required to maintain records relating to stock of goods? So in case of a person opting for composition scheme, it is I for MA, TS not required, tax details and stock details. So stock details are not required to be maintained by a person opting for composition scheme. Then in which manner it is mandatory to maintain books of accounts? Either, that's what I told you in the first MCQ, either it can be manual or electronic. There is no condition that it should be in manual form or electronic. Either it is in manual or electronic. Then question number 5, where the dash considers that any class of taxable persons is not in a position to keep and maintain accounts in accordance with the provisions of this section, he may, for reasons to be recorded in writing, permit such class of taxable person to maintain accounts in such manner as may be prescribed. So, suppose if practically he is not in a position to keep and maintain in accordance with the provisions of this section, commissioner is having power to permit such taxable person to maintain accounts in such manner as may be prescribed. Okay. Then next, how the electronic records be authenticated by a registered person by means of a digital signature. So whenever the records are maintained in electronic form, that should be authenticated by means of a digital signature. Next, question number 7, a registered person who is engaged in manufacturing of plastic bottles is required to maintain accounts relating to. So they are required to maintain accounts relating to raw material, input services, goods manufactured and byproducts. Yes. So all process accounts they need to maintain. So like what is the WIP, raw material, and how much is converted into FG, and if is there any byproducts or waste and scrap, all these records needs to be maintained by a manufacturer. Then all the accounts and records are required to be retained until the expiry of 72 months. So 6 years or 72 months from the due date of furnishing annual return for the relevant financial year. Suppose if we go for appeal, so then 72 months from the due date of furnishing annual return for a relevant financial year, or 1 year from the outcome of that appeal, whichever is later. Then principal place of business means the place of business as mentioned in the certificate of registration as principal place of business is called as principal place of business. Why is it relevant? Because we need to maintain accounts and records relating to all the place of business in the principal place of business, and we need to maintain the accounts and records relating to additional place of business in that additional place of business. Then next we have e-waybill. In this, the first question, a registered person has to transport goods from its warehouse to its depot located at a distance of 300 kilometers in a normal cargo. E-waybill is generated on 14th March. What is the validity of e-waybill? The validity of e-waybill is 1 day for every 200 kilometers or part thereof. As it is 300 kilometers, the validity is 2 days, and the validity will be counted from the midnight of the day in which it is generated to the midnight of the next day. So 14th morning it is generated. So 14th midnight to 15th midnight, 1 day. 15th midnight to 16th midnight is second day. So therefore midnight of 16th is the correct answer. Okay. So 14th midnight to, so that is 14, 15 midnight to, so 1 day, 2 days if you add, so it will be 16th to 17th midnight. Okay, that is 16th midnight or 17th early morning, anyway you can say. Next, question number 2, ABC Limited generated e-waybill on 12th February at 14 hours. It transported over-dimensional cargo for a distance of 100 kilometers. In case of over-dimensional cargo, the validity will be 1 day for every 20 kilometers or part thereof. So therefore 100 divided by 20, so therefore it will be 5 days will be taken as the validity, and 12th February at 14 hours, so 12th February midnight, 5 days, so 13, 14, 15, 16, 17, so 17 midnight will be taken as the validity of this e-waybill generated. Then next, question number 3, Style Associates Delhi deals in denim garments has ordered jeans from Super Garments in Ludhiana, Punjab, which is 310 km away from its warehouse. E-waybill is generated by Super Garments and the order is coming by a normal cargo. So 310 kilometers for every 200 days or part thereof, like for every 200 kilometers or part thereof, it is 1 day. So therefore the validity in this case will be 2 days. The validity will be 2 days. So option B is the answer. Next, question number 4. Ajay, proprietor of firm Surya Steel Private Limited registered in Haryana, has ordered TMT steel bars amounting to 5,75,000, excluding GST at 18% on 1/5/2023, 2:25 PM from Kindle Steels registered in Madhya Pradesh, which is at a distance of 650 kilometers from the factory of Surya Steels Private Limited in Haryana. E-way bill is generated immediately and the validity is 4 days. However, due to unforeseen circumstances, we are still asked Kindle to cancel the order at 3:45 p.m. The goods are still in the warehouse. Who has asked its accountant to cancel the e-way bill? What is the time period? Yes. Can the e-way bill be cancelled? Yes, the e-way bill can be cancelled within 24 hours of its generation. So within 24 hours of its generation, and it should not be transported, means it should not be verified by the proper officer during the transit, then the e-way bill can be cancelled. What if it is transported and it is verified by the proper officer during the transit? So it should go there, and thereafter they need to return the goods and they will generate the e-way bill for us for return, sales returns. Then question number 5. Anna Private Limited registered in Delhi, consignor, sells goods to Krishan Chand registered in Punjab, who is a consignee, a grocery store owner. The consignment contains eggs and fish of a value of 50,000 exempt under GST and corrugated boxes for packing the eggs and fish of value 40,000 excluding GST 18%. See, for exempted goods e-way bill is not required, but for taxable goods e-way bill is required. But the value of the taxable goods should be more than 50,000. So now 40,000 plus 18%. 40,000 plus 18% is 47,200. So now exempted value don't take exempted value. What is the consignment value for generation of e-way bill? Only taxable. So that is 47,200. So exempted value you don't have to take. When the document contains both exempted goods as well as taxable goods, you take only the taxable goods, add the GST, because while computing 50,000 limit consignment value for e-way bill, it should include GST. Also, if there is any good sent on job work, that should also be added to this particular value, consignment value for generation of e-way bill. Then next one, payment of tax, next chapter. In this first question, self-assessed ITZ by a registered person which reflects in electronic credit ledger can only be used to make payment of what? Only tax. So balance in electronic credit ledger can be used only for payment of tax, but the balance in cash ledger can be used for payment of tax, interest, penalty, etc. So here it is only tax. Then next, number 2. Which type of number is created for every successful generation by the taxpayer to identify the challan? So it is CPIN, Common Portal Identification Number. Once the challan is created, it is CPIN, Common Portal Identification Number, and after payment of the challan, so it will be challan identification number. Okay. Upon creation of challan, so it will be called as Common Portal Identification Number. Upon payment of challan, so once the tax is paid, upon payment of challan, we will get a number called as challan identification number, which is nothing but Common Portal Identification Number plus the 4-digit bank code. So if you add, that will be challan identification number. But here they are asking successful challan generated. So it will be Common Portal Identification Number. Which of the following shall be discharged first while discharging liability of a taxable person? First, we need to pay all the dues of the previous tax period. All the dues of the previous tax period, that is self-assessed dues of the previous tax period, then self-assessed dues of the current tax period, and thereafter the arrears of tax. So anything which we have not paid, evaded, that if they identify, that we need to pay. So this is first priority. Second, current tax, current period, and then demand raised under 73 or 74. So option A is the answer. Balance in electronic credit ledger can be utilized for payment of output tax. Interest no, penalty no, late fees no. So same as first MCQ. Then what is the applicable rate of interest if a registered party fails to pay the amount of tax liability within the due date? So the interest rate for payment of tax, like short payment or non-payment of tax or wrong availment and utilization of ITC, whenever you pay some interest to government, the rate of interest is 18% per annum. Then how much time does a recipient for the payment made online, how much time does a receipt for payment made online takes to get approved or appeared at the common portal? Immediate, instant. Once you make the payment, instantly it will be reflected. So all these are not there. Okay. Then how many branches can be nominated by authorized banks as its electronic focal branch? So they will create one branch as an electronic focal branch for collection of all GST payments, only one branch. Okay. Then how many types of challans are prescribed for all taxes, fee, penalty, interest and other payments? We have only one challan, that is PMT 6 challan. So single challan only we have. Next we have chapter 14, new chapter, TDS and TCS, tax deducted at source and collected at source. At what point of time TDS is required to be deducted? Whenever the payment is made to supplier. Whenever the payment is made to supplier, not based on invoice, whenever the payment is made to supplier, at the time only the TDS needs to be deducted. Then when is tax not required to be deducted? So what should be the contract value? Contract value should exceed 2,50,000 excluding taxes. If the contract value does not exceed 2,50,000 excluding taxes, TDS is not applicable. Then next, question number 3. Mr. P, located in Gujarat, is engaged in providing taxable services to a government undertaking, Daman branch. In this case, government undertaking is liable to deduct TDS at what rate? So usually the rate of TDS is 2%. But whether it is CGST 1%, SGST 1% or IGST 2%, that's a confusion. So where is the location of supplier? What is the location of supplier? So P, located in Gujarat, is engaged in providing taxable services. So supplier is in Gujarat. What is the location of recipient? So Daman DU. Okay. And place of supply, they have not given anything. So place of supply is taken as location of recipient, that will be Daman. And what is the nature of supply? The nature of supply is interstate. So then what is the type of GST? IGST. So therefore IGST at 2%. So we need to connect it to place of supply. And we are determining place of supply as per general provisions in the absence of information. As per general provisions, what will be taken as a place of supply? Location of recipient. Then next, question number 4. Under the GST law, who is liable to collect TCS? TCS is applicable to whom? E-commerce operator on the net value of taxable supplies made through it by the suppliers. So e-commerce operator. Then question number 5. Floret Jewels Private Limited, registered in Maharashtra, sells floral jewelry via an e-commerce operator Zebel.com. Mr. Ajay placed an order of 10 sets of floral jewelry in different colors, each costing 5,000 rupees, GST 18% not included, on 20th May. However, he returned back 2 sets after 2 days in accordance with the exchange policy. Determine the value. So usually while computing the TCS will be computed on value of supplies, net value of taxable supplies. What is net value of taxable supplies? Outward supplies made through the platform minus sales returns in the same month. So in the same month, first 10 sets, each costing 5,000. So that will be 50,000. Minus sales returns, 2 sets, 5,000. So that will be 10,000. So therefore, 40,000 will be taken as the answer. So option A is the answer for this. Next, question number 6. Health Department of Gujarat is making payment of 3,54,000, 3 lakh service value, GST 54,000 to supplier for a contract of printing. Calculate TDS required to be deducted. What is the payment made? While deducting TDS, TDS is computed only on 3 lakhs. So 3 lakhs into, so 2%. 3 lakhs into 2% is what? 6,000. Don't compute TDS on 3,54,000 under GST. Under GST, TDS is computed on value excluding GST. So therefore 3 lakhs into 2%, 6,000 is the answer. Then next, question number 10. Krishi Udyog, a state government establishment registered under GST in Maharashtra, has purchased fabric worth rupees 2,80,000 exclusive of GST 12% from Messrs. Talwar Fabrics registered in Haryana. Determine the amount of TDS Udyog is liable to deduct while making payment to Talwar Fabrics. See, the value of contract, so the net value of the contract value exceed 2,50,000. So TDS is applicable, but the TDS is computed on the payment that is remitted. So therefore 2,80,000 into 2%. So that is 5,600 again. So while computing TDS or TCS, we should not include the GST. So answer 1 is the option A is the answer. Then question number 11, the provisions of section 51 relating to TDS are applicable only to such authority or board or any other body set up by an act of parliament or state legislature in which 51% or more, greater than or equals to 51%. So inequity is made by the government. So option B is the answer. So only in case of supply of goods or services to notified recipients, TDS is applicable. Then question number 12, Star Footwear, a registered seller from Maharashtra, has received an order of shoes from unregistered wholesaler from Orissa through an e-commerce site zamba.com amounting to 37,500 exclusive of GST at 12%. Star Footwear gave 10% discount at the time of supply to the wholesaler and received 37,800 inclusive of GST. Determine the amount of tax that would be collected by the e-commerce operator zamba.com. So, order from unregistered wholesaler for 37,500 exclusive of GST, and Star Footwear gave a 10% discount at the time of supply to the wholesaler and received, so 37,800 inclusive of GST. So here basically, what is the invoice value? On the invoice value only TCS will be computed. Okay. So therefore, what is the invoice value here? Invoice value is 37,500. So on 37,500, TCS needs to be computed. But here, what happens is that a discount is given. What type of discount it is? Pre-supply or post-supply discount? Pre-supply discount. What is the value of supply? So value of supply is minus 10%. That is 3,750. So 37,000 minus 3,750. 37,500 minus 3,750. 33,750 into 1%. That is 337.50 will be taken as the answer. Okay. So value of taxable supply, net value of taxable supply. So net value of taxable supply is how much? This one, like section 15, we need to determine as per section 15. So 337.5 will be taken. Next, question number 10. Krishi Udyog, a state government establishment registered under GST in Maharashtra, has purchased fabric worth rupees 2,80,000. It's repeated question. So value is 2,80,000. 2,80,000 is contract value more than 2,50,000, and TDS will be computed at the rate of 2% TDS. So 5,600. It's a repeated one. Question number 11 is also repeated. So greater than or equals to 51%. Okay. So these two questions are repeated. No, this page itself got repeated. So Star Footwear, this also already we have seen 337.5. Then next chapter that we are moving on to is returns under GST. In that first question, Kalim and Associates made an application for cancellation of GST registration in the month of March due to closure of its business. Its application for cancellation of GST registration was approved with effect from 4th September by proper officer by passing an order for the same on 14th September. What is the due date of filing GSTR 10? Actually, as per law, there is a confusion here. So 3 months from the date of cancellation or order of cancellation, whichever is later. So what is the date of cancellation? So they made an application for cancellation which got approved with effect from 4th September. So 4th September plus 3 months. 4th September plus 3 months. Okay. Or order of cancellation, whichever is later. But actually ICI is telling, so date of cancellation plus 3 months and order of cancellation also plus 3 months. This is what they are telling, 14th September plus 3 months. So according to ICI, they are telling both dates you have to add 3 months. 3 months from the date of cancellation, 3 months from the order of cancellation, whichever is later to be taken. Okay. So what I said is that 3 months from the date of cancellation or order of cancellation. So there are two interpretations. So means 3 months only for date of cancellation or order of cancellation, whichever is later. But for ICI, they are telling 3 months from the date of cancellation or 3 months from the order of cancellation, whichever is later. So 14th September plus 3 months. So that is October, November, December. So option D is the answer. This is for ICI exam. But reality it is different. Okay, but that is irrelevant. As you are writing exam, You add 3 months for both date of cancellation as well as order of cancellation. Then next question number 2. While filing GSTR 3B of a taxable person registered in GST, which of the following need not be mentioned in GSTR 3B? Which is not required to be mentioned. So outward supplies, yes, we need to mention. Invoice wise details not required, just the summary. Payment of tax under reverse charge we need to mention. Eligible ITC as per 2B we need to mention. Invoice wise details we need to mention only in GSTR 1. Option B is the answer. Then question 3. Jayanti Candles and Company registered in Maharashtra supplies commercial grade candles to its customers. On 24th August, its accountant received a call from the customer in Orissa that its GSTR 2B has not reflected a bill dated 22nd April 2023 till now. On checking, he found that the bill has been inadvertently entered in GSTR 1 of April 2023 in the name of party in Karnataka. In which return can the bill be amended by the accountant? So August they are filing one return now. In the GSTR 1 they can rectify. What is the time limit for rectification? So 30th November of the succeeding financial year. What is this financial year? So 2023-24. So 2024 November they can, or date of filing until whichever is earlier. So still we are in 2023. Yes, the return can be rectified by way of amendment. Okay. Then question number 4. RR Stationaries, dealers of wholesale and retail stationery items are registered under QRMP scheme in GST for the financial year 23-24. It has opted for fixed sum method of payment in the previous quarter, April to June, and tax paid in cash was 10,000 rupees in April under GST PMT 6, rupees 12,000 in May under PMT 6, and 7,000 for the quarter 24 July. So under fixed sum method they have made this. And so for the previous quarter, April to June. Now RR stationaries want to deposit the tax. So for the quarter April to June, what is the liability? So net liability for the quarter April to June, if you see, the net liability is 10,000 plus 12,000 plus 7,000. So that will come to, so 29,000 is the net liability for the previous quarter. Now they want to deposit the tax for the month of July. Now this quarter also, that is July to September also they are going for QRMP and they are under fixed sum method. Now we need to take previous quarter 3B liability into 35%. So for July, how much they need to deposit? 29,000 into 35%. What is 29,000 into 35%? So that will be 10,150 will be taken as the answer under fixed sum method. So for July and August, they need to deposit 10,150. How, sir? 10,000 plus 12, 22,000 plus 7, 29,000 into 35%. Then next one. Question number 5. Shubham Traders Private Limited is registered in Meghalaya, northeastern state. Its turnover in the immediate previous financial year is 4.95 crores. While filing GSTR 1 for the current financial year, the accountant prepared the HSN summary but is unaware of the number of digits. If the aggregate turnover during previous year does not exceed 5 crores, so then we need to enter 4 digits, that too for B2B supplies. Okay, so during the previous year, if it does not exceed 5 crores. So number of digits, how many digits of HSN is mandatory to be mentioned in GSTR 1 of Shubham Traders Private Limited. So previous year, how much? 4.95 crores. 4.95 crores means it does not exceed 5 crores. When it does not exceed 5 crores, we need to enter 4 digits for B2B supplies. Whereas if it exceeds 5 crores, then we need to enter 6 digits for both B2B and B2C. But they are telling 6 digits, which is wrong. It should be only 4 digits that should be taken. Question number 6. Mr. Ritesh runs a e-commerce website Flipover and he has registered himself as e-commerce operator under GST in Delhi. Being an e-commerce operator, Flipover needs to furnish the details of supplies on which it has collected TCS. which form does Mr. Ritesh need to file? So e-commerce operator is required to file GSTR 8. TDS deductor is GSTR 7. So GSTR 8 is the answer. Then question number 7. Nirman Industries, a registered person in Faridabad, Haryana, has purchased goods from 3 suppliers registered in Delhi and 2 suppliers registered in Punjab. 1 supplier from Delhi failed to file GSTR 1 on time. Now Nirman Industries want to evaluate its tax payable in cash for the subject month and check whether the company has failed to file their GSTR 1 to calculate the available ITC. Which form should Nirman Industries check? So how the details of inward supplies and eligible ITC we can check in GSTR 2B. Then of course here the ITC will come even though they are under QRMP. If they go for IFF, who the supplier go for IFF, the details will come in 2B. Then question number 8. Mr. Rishabh Gaba, registered under GST in Delhi, had turnover of 75 lakhs in the previous year. He has registered himself under composition scheme in GST as he projects his sale to be below 1.5 crores in the forthcoming years as well, and all sales will take place in Delhi. He has deposited his tax quarterly. Now he wants to file return of the company on a yearly basis. What is the annual return for a person opting for composition scheme? GSTR 4. And it is to be filed by 30th April of the succeeding financial year. Then ABC Limited supplied certain taxable goods at a list price of 1,53,000 to PQR Limited. Considering that the goods are of brittle nature, PQR Limited has asked appropriate packing of the same to avoid breakage during transportation. ABC Limited additionally charged 5,500 towards packing charges. They also received a subsidy of 2,800 per item from state government on sale of each such item. Determine the value of taxable supply assuming that cash discount is allowed at the rate of 2.5% on the list price of the goods. First, we need to take list price as 1,53,000 is the list price. And special packing charges 5,500, it is to be included as per section 15(2)(c), incidental expense or any other expenses charged before delivery of the goods or supply of service. So 5,500 we need to add. And they got a subsidy from state government. So we don't know whether the given price is after considering subsidy or without considering the subsidy. So assuming that, so in the absence of information, we will assume that the given price is after considering the subsidy. So 1,53,000 is after considering subsidy, means this 2,800 is already deducted. While computing 1,53,000, it is to be excluded because it is subsidy from state government, is to be excluded. It is already excluded, so ignore. And discount is given at the time of supply. So cash discount is allowed at the rate of 2.5% on the list price of the goods, means at the time of supply itself they have given the cash discount. So 1,53,000 into 2%, 1,53,000 into 2.5%. So we'll come to 1,53,000 into, so 2.5%. So 3,825 if you reduce. So balance 1,53,000 plus 5,500 minus 3,825. So 1,54,675 will be taken as the value for this. So then question number 10, this is the last question. The due date of filing final return, already we have seen 3 months from date of cancellation or order of cancellation, whichever is later. So with this, all chapter wise MCQs that is given in ICAI Knowledge Board of Studies Knowledge Portal is completed.